Okay. So on June 22nd, I found this trade right here on Neo. Just like quick TA over here. So basically, I think it was a $21 call for June 24th expiry that I opened on this one. Basically the entry was $1.15. And I sold at around 1.3, 1.35, I think. Basically the trade was because the stock was sorry, the stock was trading super low relative to the other Chinese stocks that I saw. I felt Neo had a good chance of climbing back up. Um, and also because this is one of my strategies, right? So my friend here, Mr. Sam, he actually found that there was a distance from EMA script on TradingView, and this is just one of the ways that I could see um, if I could use my strategy of super far from the EMA, right? And basically, how I traded this was I waited for this green bullish candle that ended at 950, and based on that, I knew that because like it was super far from the EMA, right? And based on this close, I wanted to see another candlestick that pointed that it was going to be green, right? Because I didn't know if the reversal was actually going to happen, right? Um, so when this candlestick right here closed, that's when I was like, okay, I could get into a trade, right? So it was almost chasing, but not really, because if you actually look, my entry was at 22.57, 22.6, let's say, and there's like about 30 cents of movement that I could realistically get if the bullish move does happen, and I did get that, right? So even if this red candlestick right here was red, that's actually better for me. Only I kind of chased a little bit, so I didn't get like the best entry. In reality, I could have gotten 10% lower than my entry, which was around 1.02, 1.03. But I kind of chased a little bit here, right? Either way, it still worked out pretty good because the support on the clouds here actually held, right? It even went down to like 22.43, right? So that was a good trade, I would say. And like if you actually follow this trade right here, the other strategy that I have, which was the EMA crossing, right? The clouds turning from red to green happened as well. So I could have gotten like a higher percentage gain. Probably I could have sold at around 1.4, 1.45. Only I stopped trading this stock by then. And then there was another trade that I did. Let me just check here. So this was Futu. So I was trading Futu on, I think it was this candle right here, 1020 to 1025. I don't remember exactly which it was, but basically the idea was that this kind of like sort of a triangle that was forming, right, um, was what I expected to happen, right? So I got on the trade at around, let's see. So I got in around like right here, I would say. In terms of the contract, it was the $51 call for Futu on for June 24th expiry. Basically what I entered in, I think it was a dollar 30 or $1.35. I don't remember exactly. Actually, let me just check so I can. Okay. Sorry, it wasn't $1.30. It was $1.25 actually. So the trade lasted about 5 minutes, from what I recall. So yeah, so it was right around here. And the spread was pretty bad for Futu in general. So that one was like I knew that I was gonna be okay even if I had chased sort of. Mainly because like after this candle closed, I just bought right away. And I think the spread was like about 20 cents from bid to ask. So I just bought into the middle price of that, right? And luckily I was able to fill the orders, and I sold at around right here. So right when it hit 50.8, 50.85, that's when my contract sold for 1.5. So I did 1.25 to 1.5. That's roughly like 20%, 25%. So not a bad trade. I can't ask for more, like it's only 5 minutes, right? And lastly, I did Walmart. Actually, let me just stop the share and I'll point out to another screen. Okay, so you can see here, this was on June 23rd, right? So on this candle right here on the daily, let me just go to like a 10-minute so you can see a little bit better. Right. So for this trade, it was the fact that a lot of the EMAs here were crossing over. That's why I got into it, right? And I was already watching Walmart anyway because as you can see, right, it has a double bottom, right, that formed around here last week, right? And because of that, I was quite positive that the play would happen. Right? And I was like, okay, seems like the support was holding, right? Which was this EMA right here. I think this was the 8 EMA, right, on my chart here. So I was like, okay, first candle right here was a green, right? We can switch to a 5-minute to actually see it a little bit better. 10-minute doesn't really do it justice, right? So right here, the cross, right? The 89 EMA was crossed over by the 8 EMA, and the EMA cross strategy that I told 2 weeks ago is exactly that, right? The 8 crossing the 89 is one of the best strategies out there. So I entered right after this first 5-minute candle, right? So it went below about 122.27. I was almost chasing this in reality. And basically, I was quite positive that I was going to be doing okay, at least for the first 15 minutes of the market open. Mainly because when you get this crossover right at market open, right, it's usually very bullish, right? So I could have sold like right from my entry here. I think it was 1.7. I could have sold at about $2 right away, right? So that's almost a 20% gain. But because there was a lot of room to go to 124, I found out that, or I decided that I was gonna hold it at least for the whole day, if not overnight, right? And as you can see, right, I held through all of this candles, right, and sold finally here. It wasn't too much. I think it was 2.6 that yeah. So it was only 2 contracts, right? mainly because like it was a swing. I didn't really like swinging. So this is just one of my small accounts, right? So it's not too bad a gain. I think it was like 60% of my account for the week, and I only did 3 trades. So not too bad, I would say. But I want to point out to a different chart again. Just another way of looking at the trade, aside from like this daily chart and the bullish pattern that was forming in like 5 minutes and 10 minutes. Right, let me just change this chart. So, whoops, don't want that. So on the Renko chart right here, so I think the trade was right around here, right? Roughly here. So that was the 23rd, right? Yeah. It doesn't really show on the Renko chart that much, but basically like I saw that the clouds were turning green, right? And it was like very bullish, and then you had a lot of room to basically like hit this red clouds, right? If you look on here, there was, so we have like a double bottom, right? Roughly, right? Which shows on the normal candlestick charts. And then at the same time, right, your W was broken, right? So there was a lot of room. So there was here 122.4, right? So we were here. That's when I roughly entered, right? So that was broken, right? And then there was this 124 area, right? So the fact that we were at around this level, right, was really good because I was like, okay, I could probably enter this trade and like hold it for a day as well, because the Renko charts say price action is going to move up, especially with all of these clouds turning green, right? And again, that is a strategy that I talked about 2 weeks ago. Yeah, so that. I got, it was a good 1.7, 2.6 sold. Yeah, so that was that. Basically like in terms of entering or exiting the trades, right? Make sure that you have like some sort of like price target, like based on what you're seeing from the charts, right? As you probably already know, in terms of when you're moving up in price, right? There's always resistances, right? So you always look left, right? And based on the charts that I saw, it seemed like those previous resistances were broken already, right? So I go to the next one, right? And I even talked about this with Mr. Sam, and he said it was like 124, 124.5 is like a good price target for this stock. So yeah, like it was just like confirmation as well as the clouds turning really bullish, right? You could even, we can even like say that, for example, right? I don't know if you know this type of strategy, but uh, you have a 3-bar play here, right? So that's a 3-bar play, right? You have the, let's see, right? So you have this guy here, and then you have the on the red candle, right? On daily, you have the kind of like the consolidation part, and then you have the next, the third leg of the 3-bar play, which is breaking out of the consolidation, right? That's just a few ways of really like thinking about it, right? And like in terms of like when you're going into like options, right? It's always good to go for at least a week out, maybe 2 weeks out when you're unsure of when the move is going to happen, right? And that's basically like how I could manage my risk. Even for this, right? It was only 2 contracts. In reality, I could have probably bought like 4 contracts in this account. But I only did 2 because it was sort of chasing really. Right? As you can see, right, the entry was right at the top here almost. Yeah, so when you're going into a trade, right, there's 2 ways to really do it. One is if you're chasing, instead of doing like the full 100% position, I would maybe go like only 60% of it, maybe 70%, right? So if we talk in threes, right? If you usually do 3 contracts each time, only go for 2, right? Maybe even just 1, right? I mentioned in my previous class, right, that whenever you get these crossovers, it's always a good thing to sort of wait for the re-entry for the trade, right? Mainly because like when you get a breakout, there's always a retest of the breakout, right? And that's basically what happened here in Walmart, right? So the retest happened, what was the low here? Let's see. So 1.54 roughly, right? So I entered at 1.7, so that's about a 10% drawdown. And basically that is the risk factor I was accounting for, right? If I chase this and hold for a day, will I be able to be fine with the drawdown, right? And even here, right? Let's say you didn't want to hold it, right? So it went from 1.7 to 2.24 here, right? You could have probably sold that around 2.15, and that's about roughly a 30% gain, which is really good in my opinion. Like I said, right, I'm usually a more conservative type, so I do 10 to 30%, at least in all of my trades. That's what I try to aim for. And yeah, so right, I held through all of this. I actually wanted to see if Walmart was going to 124 on June 23, right? But it didn't. I had to sell at 2.6, 2.5, right? And yeah, I was like, okay, whatever. The doesn't seem right for me that to sell it for like a 10% loss. So that was all well because as you probably know, right? The 89 EMA over here held, right? So this was the last line of defense basically right here. And you could even what's it called? If I had seen this, I would have probably bought even more, right? But I saw it at around here. Even then, there's another crossover here, as you can see, right? 8 over 21 EMA or 20 EMA. And yeah, that's basically how I entered and exited the trade for Walmart. I have another trade that I did actually. Let's see. This one will be the last one for today. This one was a really good trade. So this was Home Depot, right? And I started watching it here on June 22nd. So let's go to that. So right here. So on the 10-minute chart, right? I noticed that this stock was getting really good around here, mainly because there was the let me just put in the indicator. So again, right, distance from the EMA, this is almost like an inverted hammer, and it's super far from the EMA, right? So over here, we're looking at -4, -3, right? And yeah, so over here I was like, maybe I should buy $280 calls for Home Depot, right? And I actually did. I bought 2 contracts for just lottos for the Friday expiry, and I bought it at about 0.4, 0.5, and at the end of it, it went and sold for like $3, like the very big gain, right? But my expectation for this was that if the market starts creeping back up, right, Home Depot would be a really good trade because it was super far from the EMA, and like $280 was like kind of like a good price target, because if you look left, you have this resistance here, right? And resistances are usually a magnet when you're bouncing back, right? So that right here was like, okay, $280 call. I could lose $100 and probably make 200 bucks or so, right? So I sold it at because like I was not expecting the market to be like going up super high. I had an expectation that I would at least be able to hit 50% on those Home Depot calls, maybe even 100%, right? And basically, this was, I would say, like a bad trade on my part, because I knew that Home Depot was creeping up, but like I forgot about it, and I forgot to move up my bids as well. So I had it at about 0.7, 0.75 from 0.50. So it went up, right? And then I was like, oh shit, I got a notification that my trade just sold, right? One of the ways to like kind of like look at it, right? Especially for lottos. I would say that for most of the lottos that I do, I would rather buy it at the end of the day, because theta basically kills those contracts, right? If your stock is not moving, right, you get a higher chance of bidding for a much lower price, right? And that was the case with Home Depot. I think it went to as low as 0.2 or 0.3, if I recall correctly, on Thursday, before it shooting up a lot. And yeah, so that is basically the class for today. If you guys have any like questions or discussions that you want to do, feel free to say something. Okay, guess there's none, right? Okay. So we'll end it for today. See you guys in 2 weeks.